Taking a leg lower today with the home construction ETF falling for the third straight day. However, recent housing data beat expectations with October new home sales up more than 31% from 1 year ago and total mortgage application volume up 153% from a year ago. Joining us now, Sanjiv, CEO of Caliber Home Loans, which is one of the biggest mortgage lenders in the US. Thanks so much for joining us. Good to see you.
Good to see you too.
So talk to us about the pace of growth you guys have seen personally, and where you think it's coming from relative to the traditional players.
Sure. Well, Caliber's in staggering growth in the last quarter. I think Q3 to Q2, we grew about 70%. But just to give you a sense of the growth, about 6 months ago, we do about $3.5 billion of mortgages a month. We are now doing $7 billion of mortgages a month. We'll probably end up doing about $60 billion of mortgages a month in a year.
I guess I know correlation is not the same thing as causation, but you're growing incredibly fast,
yes,
late in the economic cycle, perhaps at a time when the traditional banks are deciding to pause. They may be making that decision for risk reasons. You might not be taking on more risk, but how do you respond to people that suggest you might be taking a lot of risk late in the cycle when others aren't prepared to do so?
Well, actually, we are not. It seems like what is actually driving the growth in this cycle so late in the cycle is the fall in interest rates. And so what the fall in interest rates...
But nobody else is growing, doubling their size like you are.
Well, the non-bank lenders as a category are doing quite well.
Why is that?
Because I think that in general, the banks have been more risk averse to mortgages after sort of what happened during the housing crisis. Whereas I think the non-banks are stepping in.
So there is a risk consideration to this. Even if you're not taking on too much risk, you think that the banks are taking on too little risk?
Yes, I think the banks are taking on too little risk. For example, the FHA loan category is a category that banks have completely stepped out of because of the DOJ risk from many years ago. Whereas we find that there are homeowners who have a 5 to 10% deposit that are perfectly eligible for an FHA.
This is not something